Today we're focusing on personal tax and whether you need to file a self-assessment. You'll see from the decorations that it's December, and it's this time of year we get asked this question the most. So if you're self-employed or have a source of untaxed income, you are required to file self-assessment each year. This criteria is very broad, frankly quite vague, and it's not 100% accurate. So in this video, I'm going to explain the rules and share some examples of who does, and more importantly, who does not need to file a return. Before we dive in, subscribe to this channel and please post comments in the section below. To introduce myself, I'm Tanya Bennett from North Star Accounting. We provide easy to follow tax and business advisory services for small businesses and individuals. Are you puzzled about whether you actually need to file a self-assessment return this year? After all, doesn't HMRC already know about most of your income? So if you are puzzled, let me know in the comments below. HMRC guidance can be confusing, and whilst often it's very good, it doesn't cover all scenarios in a clear and easy way to follow. So let's get you some clarity. Let's start with small business owners. If you're a sole trader or a partner in a partnership, you will need to file a tax return each year. The only exception is a sole trader who has earned less than £1,000 in that tax year. So, if you're an online seller who sold goods worth more than £1,000 in a tax year, you'll need to file a return. And if you aren't in business, but you're selling some personal possessions to earn some extra cash on eBay or Gumtree, for example, you're selling your kid's bike, you may also be required to file depending on how much you make. Also, if an item is worth more than £6,000, with the exception of cars, then capital gains tax may be due. Another type of small business is a contractor using an umbrella company. In this scenario, you are employed by the umbrella company who will report your salary and tax on your behalf. If you have no other income, then there is no need to file. And what if you're the director of a company? In the past, HMRC has insisted that all directors file a self-assessment regardless of income, but this isn't correct. The criteria for filing is the same as any employed individual. If your main income is taxed through payroll, you earn small amounts of savings interest and up to £2,000 of dividends only, again, you don't need to file a return. But if you receive more than £2,000 dividends per tax year, you will need to file one. And that's a really typical scenario we see with many clients. So what other income triggers the need to file a return? All employees earning more than £100,000 per year are obliged to file a return. And this is because over that £100,000, your personal allowance starts to be reduced, and this needs to be factored into your tax calculation. Secondly, if you receive rental income from a property, any landlord with income greater than £2,500 must file. If you receive income from overseas or investments that aren't in an ISA, which is your tax-free savings or investment pot. And finally, if you're a minister of religion, even if you're only paid a salary by the church. If you still aren't sure whether you need to file or not, this next tip is super important. HMRC have an online tool where you can check whether or not you need to file a return. You search the gov.uk website for check if you need to send a self-assessment tax return, and a webpage pops up. You step through a few simple questions to get your answer. But do take note on that first question. It asks if you work for yourself. If you are a director of a company, the answer is yes, whether or not you received income from that company. And if you have any doubts whether or not you owe tax, it's worth checking and use that tool. Remember, the onus is on you as the taxpayer to tell HMRC that you owe tax. HMRC can't ask for tax on income it doesn't know about. But don't underestimate how much HMRC already knows about your financial affairs in this digital age of data sharing. What if HMRC has been in touch and you've received a notice to file a tax return, but you don't believe you need to file one? The most important thing to do is not to ignore it. If you do nothing, you'll incur non-filing penalties even if no tax is due. The best thing to do is to contact HMRC self-assessment and ask them to withdraw the notice. You may do this through multiple channels online using your personal tax account, on the phone or by post. And you need to do this as soon as possible. Don't leave it to January the 31st to sort. Trying to get hold of HMRC close to the January deadline will try anyone's patience. It's really hard. They're busy people. Hopefully you found these tips on your self-assessment helpful. If you'd like some help with your self-assessment, do get in touch with us at northstaraccounting.co.uk or post questions below. And if you like the tips I've outlined, give the video a like and subscribe to the channel for more advice on all things accounting. Thank you.